I do think we're getting to one of those points where there's going to be a year where more happens than in 5 decades as far as like a monetary shift that just occurs. And people will look back on it and say, what the hell just happened?
The purpose of technology is to drive prices lower, but the inflationary fiat regime depends on prices going up.
It's kind of like a cliff where it's like Hemingway said, how do you go bankrupt? Slowly at first and then all at once.
Moving your purchasing power into physical gold or Bitcoin in a way is kind of like participating in a tax revolt.
You know, it's really going to be the beginning of a new game, a new system. And we can get through it, but hopefully we don't get through it with World War I or a World War II.
How do you see the geopolitical landscape reconfiguring itself?
I'm very skeptical of the Bitcoin strategic reserve being a good thing. You see how they're just moving the whole thing under their control.
Okay, that definitely breaks down at some point. How does that break down?
So if you start getting actual revenues through tariffs and you can revalue gold with executive order, you all of a sudden are building essentially a dictatorship.
This is such a strange world we're going into. So you've written this book, which we talked about last time when you were on the show, Quoz, and it's exploring artificial intelligence, central banking, global economic instability. It's a fiction book, but obviously very relevant to things that are going on today. For those that may have not listened to our last episode together, maybe we could just set the stage by talking about the contents of your book. Mm-hmm. Give me the overarching theme, thesis, and maybe we can get into a little bit of how it relates to all the things that are happening in the world today.
Sure. Well, Quoz, it's a financial thriller. It's got a lot of financial history interwoven in it, but really it was an attempt to take a look at what could be a possible path of where things are heading, given the monetary, situation, the debt situation, what's happening with digital assets, with Bitcoin, stable coins, central bank digital currencies. Like, where is this all heading, and try to wrap that up into kind of an interesting package. And, I didn't realize it when I wrote it, but like there's a scene in one of the first chapters where like the Reserve Bank of India is calling all of its gold, back from the Bank of England. And, they recently, last year, called back 100 tons of gold, sure enough, and we're recently, the gold shortages in London have been in the news recently. Yeah. The Bank of England's wait time has gone from a couple days to a couple months. And so gold repatriation, gold coming more into the center, and really just kind of a breakdown of the dollar and the rise of a neutral reserve asset. And of course, Bitcoin relates to that as well. And so that was kind of the attempt to do this in kind of an interesting, exciting read way. So it's not exactly straight, it's not a nonfiction book, but it's got stuff in there. And it talks a little bit about the history and, previous gold revaluations, things like that, FDR, Nixon, and just helps to educate the reader a little bit and try to, give them an exciting story. Gotcha. So I want to just kind of shine a spotlight on some of these issues, which I think, we've had these on the back burner for a long time. And sure enough, especially in the last, I would say just 6 months, people, even the big names where they were afraid to come out and admit, we've got a debt problem, like Social Security is going to go bankrupt in just a handful of years. Like this needs to be addressed. The dollar breakdown where, you're seeing it do fine against other currencies, but you're seeing it just go to zero against everything else, basically. So, I think that's really what I was trying to encapsulate in it. And it does tie in a lot today. And then there's a quantum AI component to it as well, which just impacts the markets and things in ways that I think, we haven't even begun to see yet once that stuff starts getting really employed.
For sure. So what year did you write this then?
I had it taking place in 2027.
Okay.
And I wrote this in 2022 and 2023.
Oh, wow. Okay. So recently written. What can you walk us through? Because I think some of the most mysterious aspects of that are what you just said, right? How is AI, quantum computing, these other technological marvels, how are they going to impact financial markets, global markets in a way that we don't see coming, right?
Yeah.
I mean, at least how do you contemplate it in the book?
Yeah. Well, I mean, I generally think of like the S&P a little bit of it's a Ponzi scheme these days, almost in my opinion.
Because of the money printing?
The money printing, the fact that it has become the nation's pension plan in a way for the top 20-25% of Americans, right? So it's the money printing, it's the retirement plan aspect to it, it's the passive aspect to it, the fact that 25, 30 years ago, 85% of trades were being done by like portfolio managers looking at companies or individual investors. And now it's like 95+% are just algos and passive, and a lot of these research shops and even when you get into active portfolio managers these days, because of the concentration of the S&P, I mean, they've got to have Apple and Microsoft and Nvidia, and they've got to be big chunks of those portfolios. And then, they scatter around with the rest. And so I think what's happened is, we've seen it in housing, right? It's this search for a reserve asset that can hold its value.
Yeah.
And people plug it into the S&P saying that'll do it. People plug it into houses saying that to do it. But there's problems with those things, right? Because the S&P is supposed to have a tie to some sort of realistic valuation. And, for years, people come on and they're like, well, the S&P normally trades at 15 times. It's at 20. It's expensive. But, we still haven't had that deep crash or correction yet, because anytime that naturally is getting ready to occur, the Federal Reserve steps in and provides liquidity. They figure out a way to do backdoor QE. The Treasury Department runs down the Treasury General account and injects stimulus or, whatever it is. And it's because of this fear that what would happen if we had anything even remotely like 1929, where it goes down 80% and doesn't come back, inflation adjusted for like 30 years.
Yeah.
It would devastate. And so we've got it to a point where they're telling people, they don't even tell them anymore. You get a job, they're going to start taking money out and putting it in the S&P for you. It's going to go into your 401k. You're automatically signed up, and so they're forcing people to put their money in there. They're always trying to calm the markets. Federal Reserve's prepared to backstop in any way. And so it's not really a true valuation tool of what is the real value of these equity companies anymore.
For sure. No, yeah, one of the ways I have tried to communicate that is that when you break the store of value function of money, I don't love that term, but that's the one that's popular. When money doesn't hold purchasing power over time, people are incentivized to move their purchasing power in anything that does, right? So they'll, commodities will get a monetary premium, equities get a monetary premium. Obviously, Bitcoin has exploded because of all this money printing. And so that does seem to be the situation, right? Where these markets were really meant to be an accurate valuation for company capital. They get attributed this monetary premium that creates a distortion, basically.
Yeah, exactly.
What about, you mentioned passive, is that related to index funds?
Yeah, just the index funds and the fact that the hard work of like figuring out okay, so like you said, the purpose was there's some sort of a risk-free rate or some sort of return that can be gotten from a fairly valued treasury market. So now we started, we're talking about distortions in the equity market, but we've had all these distortions in the fixed income market.
Sure.
And once you screw with interest rates, right, the price of money, then how do you even justly value, an instrument like an equity? And so it used to be like, okay, so let's say there's a 5% risk-free and this company is throwing off 5% cash flow, what's the appropriate equity risk premium to pay on this, back that into a price earnings multiple. And all these things were supposed to make sense. And if stuff got too expensive, smart investors wouldn't buy it. They'd say, I'm not going to buy this at 40 times. I can get, a T-bill at 5%.
Yeah.
But when you lose confidence that T-note, like a 10-year note yield is a legitimate yield, and it's not going to give you a real return because of inflation and the money printing, then you get backed and forced into art and Bitcoin and stocks and homes and boats and anything else that's not going to just, crash in value.
Yeah. So there's this, I've used this metaphor, I guess, of like an osmotic pressure, right? You're forcing market participants further out along the risk curve, right? Whether they're trying to increase wealth or preserve wealth. Basically, the thing that, as you're saying, the primary ways, the T-bill that yields you 5%. Well, if it pays you back 5% nominal dollars, but your inflation rate's 8% annual or whatever, then you're getting a negative 3% real return. Well, then T-bills are out, right? That doesn't work for preserving value. You now have to go further out along the risk curve into equities or worse, basically, to try to get any return. So it's like, you know, there's a lot of jargon and obfuscation around this particular topic, but at the end of the day, I think it's just basically you're stealing from savers. And so those savers that are just looking to preserve purchasing power across time, right? There's a natural demand for sound money. And start to impute that to other assets because the money's not working. So everything, the monetary premium starts to bleed over into these other asset classes. Sorry, that wasn't like exactly simple, but you know, I guess what I'm getting at is people, you know, it's hard to earn wealth. And, you know, there's a lot of people, most people are in the get rich business, right? They're trying to figure out how to get rich, but then there's a lot of people that play in these markets that are in the stay rich business. And they're really just trying to figure out how to preserve the wealth they've already accumulated over time. And so, you know, they tend to be risk averse. They tend to try and diversify and follow conventional wisdom, I guess you might say, the 60-40 portfolio and whatnot. But all these things are breaking down, right? And it's not just, I will say, you know, to give the devil his due here, it's not just the manipulation of the currency. There's other factors at play, like the fact that FANG stocks, for instance, have these historically unprecedented premiums. You know, like their PE ratios are just astronomical. That's in part from the money printing, but I think it's also in part because they're just different business models, right? They're network businesses. And they have kind of a natural monopoly.
But even Walmart's at 40, Costco's at a 50 PE.
There you go. There you go. And the historic was like, what, 32 was like the highest?
For Walmart, maybe 20.
20. Okay, there you go. So that's a money printing thing for sure. But in the high tech sectors, there are other distortions that are not just from the central bank, right? There are these, we're trying to figure out how to value these new businesses and technology. So I don't know, could you talk a little bit about that? Like what kind of complexity has modern digital technology introduced to, you know, traditional value investing?
Yeah, well, I mean, if you look at it now, so to come back to your original point, just that push out on the risk spectrum. And you're seeing that the multiples, I think, have gotten so high in the US that even though a lot of people in a fundamental way are out there saying there's huge problems with, say, Europe, you know, the Europe stock market's been doing really well this year because people have to put that money somewhere. They have nowhere where they feel comfortable storing it and preserving purchasing power. And that's how powerful, you know, the solution of Bitcoin is, right? Obviously, gold has, in one way or another, provided that function for thousands of years. And so when they withdrew gold, you know, from that monetary system and didn't give it that, you know, imprint of, you know, money, and took that away, that's really when this whole thing, you know, started. So it's not something that just COVID did, or just the 2008 financial crisis did. It really began in the 70s and 80s. And it's taken that long, but we're now nearing that end game, which, you know, it's really going to be the beginning of a new game, a new system, a new post-Bretton Woods, you know, monetary system is emerging before our eyes. Exactly what it's going to be is still to be determined. But all of this goes, you know, back into any asset, the technological impact on investing, the fact that the money can be pulled in, pulled out. You've got the algos. I mean, it's like an earnings report comes out and like 5 million shares trade in less than a second, you know, because no person read that earnings report, you know.
AI may have.
AI may have processed it and determined what to do it. And what's going to happen when AI does start doing that? So right now the algo might be, you know, read how much of a percentage gain, beat or miss was it on revenue? How much was it on earnings? Maybe there's a couple other key metrics you have the algo, you know, pull out from that release, such as, you know, margins or units sold, or if it's like a Tesla or something like that. And so it's reading these 2 or 3 key bullets, and that's why you see the gyrations, and that's why, you know, the next day it could trade completely differently than it did in the after hours. But once you get AI that actually near instantaneously can digest the whole earnings report factor in all the macro considerations, do all of that, it just starts like, okay, here's what the thing is. And once people start believing that AI number is the right number, what is the incentive to have portfolio managers making all of this? And that's really what Quoz is about. Like, it's a future where like there's no portfolio managers. The market's just kind of on steady cruise control because of AI. It still goes up, it goes down, but the volatility is taken out of it. And so the impact of technology on the markets and on finance, I don't think anybody really realizes it. When you look at the financialization of America, and you think already, like I've talked about with the algos and how the research shops have closed because of the passive, and people that, there used to be tons of amazing, mutual fund value investors. They go through reports, they visit the factory floors, they do all that. That's not happening anymore. And the AI is only going to accelerate that. And so we're getting into this automated financialization. And if 20% of the economy is coming from financialization, and we're not going to need all of those people anymore, what are they going to do? And how is this all going to work? And so there's a lot of these big questions that are out there. So we've got, on the one hand, these massive inflationary forces before us, the money printing and so on. But we've also got a lot of massive deflationary forces in front of us. Yeah. And I think you're seeing right now the market try to grapple with, are we heading into a growth scare and people are going to be laid off because of AI and automation and things are slowing, or are we headed for some kind of inflationary boom? And they're the 10 years going to 5-6%, and then all of a sudden, oh no, it's going to 4%. And we'll see.
Are you familiar with Jeff Booth and his book, The Price of Tomorrow?
Yeah.
And he wrestles with some of these issues as well, right? That technology obviously wants, we're kind of describe technology. The purpose of technology is to drive prices lower, right? We satisfy consumer wants, better, faster, cheaper. That's the whole point. But the inflationary fiat regime depends on prices going up to erode the government's real debt burden basically over time and externalize the cost of that debt via inflation. And so his argument in general is like these two colossal forces are just fundamentally at odds and something's going to break. How does that layer into your thesis in the book? And like, which way do you see this thing going? I mean, not to color your response, but like I would say historically, it seems like technology kind of ends up dictating in the long run, right? Like governments step in and they do what they're going to do, not just governments, right? Whatever the dominant institutional paradigm is, they will exert top-down influence to the extent they can. But when there's a major technological shift underfoot, that seems to determine which way society goes, basically. So like how it seems like we're coming out of this analog industrial age paradigm, right? With, mainstream media and central banking and, even governance, right? We have large central governments and we're moving more into this kind of decentralized media paradigm with internet and podcast. And, we've got decentralized money with Bitcoin. It's much more of a many to many model versus kind of a one to many model if I'm using database terminology. So how do you see us, whether this is in the book or just your personal views, like how do you see us progressing technologically into the 21st, 22nd centuries? Are we going to change our institutional realities? Or do you think institutional realities are going to change the course of technology?
Yeah, well, I do think, the natural course, and it is a little bit in the book. There's a scene where one of the characters talks about the central banker's greatest secret and tells another character, if you ever figure it out, you'll understand. And it's basically that the natural course of things should be deflation. The Fed should be targeting negative 2% prices, right?
Well, the Fed shouldn't exist. Right?
It shouldn't exist. It shouldn't exist. Exactly. You're perfectly right. Yeah. But the natural course of things, that's what it should be. And inflation, it's not just about deflating away the debt as well. It also, when you look at Hamilton, our first Treasury Secretary, there were revenue problems in a democracy, right? So a king could say, I want taxes, and if you don't pay me, I'm going to send my knights to ride into your village and we'll get the taxes. And very early in our republic, we're like, okay, let's have taxes. Well, let's tax whiskey, right? The famous whiskey rebellion. You know, within years after the democracy is born, people in the democracy, I mean, it was an all-out rebellion. It was, we're not in the union anymore. You know, guns were blazing. You know, it had to be put down, and it was over taxes, just as the United States with the tea tax.
Founding of the country, yeah.
And so Hamilton, you know, he made so many choices that set us on this financial situation. One of the big ones he made was, originally the idea was that national debt should be handled, bonds should be handled kind of like a mortgage, where each payment is not just interest but also principal, and at the end it gets paid. And the decision was made, no. We're just going to pay coupons of interest, and then at the end, 10 years, we just roll it over into a new one. And that set the stage that the debt was never going to be paid off. Andrew Jackson actually did, but all of these fundamental choices, and the other thing that was set there was, we're never going to be able to raise tax revenue to the extent we need to build a strong federal government by openly doing it. And we can do it through inflation. And that was what set us. And we had massive inflation post-revolution. We had massive inflation, of course, during the revolution with the Continental, which went down 99%. That was the revolutionary currency. So inflation is nothing new to this country. It's been part and parcel of it from the beginning, and it even goes back into colonial times. And so this is just a continuation of that theme. And there's been periods where there's more sound money, periods where less sound money. And we've gotten to another one of those breaking points where the money gets so unsound, like something has to be done. And I think the last time, you know, we saw that really happen, you know, in the 70s, when this idea of, oh yeah, we've got it backed by gold, that just couldn't be done anymore. And we needed a massive revaluation. And the only way they did that was through, you know, like 10 years of on and off massive inflation. And I think we need another massive revaluation. And that's why, despite the best hopes, and we're going to control inflation and we're going to get this under control, the dollar is just overvalued. It's still overvalued. It needs to come back to what it really should be in a fair world. And it's being overvalued by all of this manipulation, by the Fed buying, you know, the balance sheet's at about 7 trillion now, but it was 9 trillion, by the Treasury issuing a lot of T-bills that then the banks buy, and then the banks go ahead and reverse repo it with the Fed, and then they take that and loan out against it. So it's not really eating up capital. Like, all of these things are starting to get to breaking points. And as that gets more and more clear, I think Bitcoin and gold are going to emerge as, you know, the only assets that do what the problem is demanding.
Yes.
Not the S&P, not real estate.
Right.
You know, not art.
That's a great way to put it. Yeah. Again, people are just trying to conserve purchasing power over time, broadly speaking, but all the options have been eliminated from them, right? You can't, well, physical gold, I guess physical gold is an option, but it's just not very practical, right? It's not integrated with financial markets. Now we have Bitcoin that's increasingly integrated with financial markets. So that's another alternative. In Bitcoin, we often dream about the idea of forming citadels, which are independent, self-sovereign communities that have their own energy, food, and water resources. Today, that dream is becoming a reality at the farm at Okefenokee. The farm is a 705-acre regenerative agriculture community located at the Florida-Georgia line near Folkston, Georgia. The farm is known as the healthiest place on earth, and it includes orchards, organic standing gardens, regenerative animal pastures, berry fields, and much, much more. Today, the farm features 25 custom-built cabins and has plans to construct 225 more in the years ahead. The farm has its own food, energy, and water sources and is completely off-grid. So if you're looking to join a Citadel community comprised of sovereign individuals, then go to okefarm.com today to learn more about membership. Make sure to tell them that I sent you for a $21,000 discount on custom cabin pricing. Again, that's okefarm.com to learn more about joining this revolutionary regenerative agriculture community. iCoin Technology has released a slick new hardware wallet. It looks like a mini iPhone with a high-res 3-inch touchscreen and camera on it. The device has no Wi-Fi, no cellular connection, and no GPS. It is an air-gapped hardware wallet which uses QR codes and a camera to communicate with the Bitcoin network. It has a built-in camera which is required for air-gap operation, and it has an optional Bluetooth compatibility. It's really a brand new user interface and user experience for a Bitcoin hardware wallet. iCoin makes self-custody accessible, easy to use, and non-intimidating. It even comes with an optional custom iCoin thermal printer so you can print out the private key and its associated QR code when you're setting up the wallet. This makes setup quick and simple. Also, it is easy to restore the wallet just by reading the seed phrase QR code with the wallet camera. And as we always talk about on this show, the only way you can truly own your Bitcoin is by having it in self-custody. So you need a device like the iCoin wallet to truly own your Bitcoin. So go to iCointechnology.com/breedlove today for 30% off the purchase of this sleek new hardware wallet. Again, that's iCointechnology.com/breedlove. But I want to circle back to this idea that you put out, which I think we could extrapolate to a lot of human history, actually, that we've had one tax revolt after another, right? Mm-hmm. Like the formation of a lot of countries, people trying to escape oppressive taxation or inflation and taxation being the same thing. Yeah. Inflation being another form of taxation, obviously, less explicit, but still nonetheless a confiscation of wealth. And you mentioned the Whiskey Rebellion. Obviously, the American Revolutionary War was really founded on a tax revolt, not only to escape, the tea tax is the famous one, but also just escaping the Bank of England, right? Mm-hmm. That people did not want to use that currency, right? They wanted to have their own currency and on their own continent. That's an interesting framing for what you're saying about gold and Bitcoin being basically identified as the solution to the problem that everyone's trying to solve, because moving your purchasing power into physical gold or Bitcoin in a way is kind of like participating in a tax revolt, right? You're saying, I am opting out of the taxation of inflation, at least. And in the case of Bitcoin, you get some interesting optionality in that you have this hyper concealable, hyper portable asset as well. So if, your explicit taxation situation is bad, then you can more easily move, your purchasing power outside of that jurisdiction. What does that mean? I mean, so if humans have been revolting against taxation for all, it's a very defining feature of humanity, I think. And now we have this, I'll focus on Bitcoin. Again, gold is sort of in this basket as well, but Bitcoin being this opt-out. It's like you can opt out with finality from the taxation of inflation. Do you see that? I mean, that sounds like a pretty good bull case for Bitcoin, that people this is what humans do, right? They revolt against taxation. We've been doing it forever. And now we have this very serious revolt. It's very easy in its execution, right? You're just swapping from dollars into Bitcoin. But then once you're in Bitcoin and you're in self-custody, then you're really out of the system in a fundamentally new way. Yeah. How does that land for you?
Well, I mean, that's powerful. I mean, that's a revolution. I mean, and that scares the powers that be. And I think, we've seen them fighting it, and now we're in danger of them trying to co-opt it as much as they can. Right. And the core of Bitcoin and the ethos of a lot of people still behind the nodes, right? Yeah. Is not to fall into that. But, it's like all of these things that we're looking at today, whether it be a strategic Bitcoin reserve or Bitcoin ETFs or, BlackRock getting its hands on so many coins, like they have their positive attributes for a broader adoption. And then they expose Bitcoin to new people who might not have taken it seriously before. And then they learn about it and then they say, wow, a light bulb goes off. So there's positives to all those things, but there's also extreme risks, right? And so, when I try to think about it and I think, well, what's the right thing? Would it be a good idea for the U.S. to have a strategic reserve or not? And would that be a right thing for price? Maybe, but maybe not for price either. it's interesting when the U.S. depegged from gold. A lot of central banks were like, we better sell our gold because it's no longer a monetary metal. It's no longer got that U.S. government backing. So we better get rid of it. The price is going to crash.
Hilarious.
Well, it went from $35 to $800 in about 10 years when the government stopped being, holding it as an official backer of the currency.
Yeah.
So I think actually in the long run, I think the less that Bitcoin becomes like official or government sanctioned, the better it is not only for the ethos of Bitcoin, but actually for the price, right? And ultimately, people will get to that point. Well, they'll start thinking of things in Bitcoin, and that will be, the way that it goes. And the dollar will just be seen as like, you don't hold anything in dollars. Like a dollar is like
just buy it to spend it.
Maybe it's a unit of a unit account or just something to price something in. For a transactional basis. And technology is going to enable that, right? So that like you're never gonna like the checking account will become a thing of the past, right? I mean, banks, like they have FedNow. FedNow is basically like an automatic, Fed wire system. Banks don't offer it. Banks want that money control, that ACH 3-day process. They want all of that, and they don't want that instantaneous transfer of funds because they need that capital kind of floating around in the banking system so that they can have that to do their loans and their fractional reserve banking, which feeds the inflation, and it's the way the commercial banking system prints money. And so pulling money out of the banking system really is what we're ultimately heading to. And whether you want to hold that in Bitcoin or gold, whatever it is, obviously Bitcoin's going to be, for technological reasons, makes a lot more sense than other things. For other circumstances, there might be people who favor a gold. That you could say, look, sometimes I like to transfer large amounts. I don't even want it on a public ledger. I don't, there are attributes to gold that, have benefits for certain groups, and including states, right? Certain states might not want a public ledger, right? Accounting of what's happening with their neutral reserve asset. So there are different aspects to both of those, but at the end of the day, it's that neutral store of value that is solving that problem that is right now creeping into our society, into our retirement schemes, into our national government funding, into everything. And it's the only thing that actually does it for the individual. And it is a revolution, and it is a taxation revolt. Again, it's another revolt against the oppression, this time of the inflation tax.
Yeah. I'd never thought of it, or maybe, I've thought of it that way, but maybe not in these explicit terms. And the other benefit, I guess, is that Bitcoin is a very, seemingly so far, at least, knock on wood, very peaceful revolt, right? A lot of these tax revolts, historically, they've led to a lot of bloodshed, conflict, et cetera. Definitely seems like opting out with Bitcoin is much less, it's bloodless, really, so far. And it also, the other interesting thing about that is it starts to fragilize the legacy financial system more and more, right? As more and more purchasing power leaves. And this thing is very indebted, right? There's a lot of, talk about a pyramid scheme. What is global debt to GDP? It's something like 3.5 to 1 right now, right? Or some nonsense number.
If you include private and public debt, there's over $350 trillion in debt right now.
On a $100 trillion GDP.
Now, US GDP is like 20% of GDP, and we're doing 30 trillion. So that'd be like what, 150 trillion, or 150%, so maybe it's 200 sometimes, but and that's not even accounting for like unfunded liabilities in places like Europe and the United States. And once you add in those, and what is the real leverage and the real debt that's out, the real obligations owned, then you are at 300, 400% GDP, and it's out of control.
Some unserviceable number, basically. So as more purchasing power leaves, that debt to real asset ratio gets worse and worse and worse, and so the whole thing, the whole house of cards, becomes more and more fragile. And I don't know. I think Bitcoin could be an accelerant to the unwind, right? The unwind that really gold bugs and libertarians have been predicting for decades.
Yeah.
What you mentioned something there though, that like clearly it's only going to have that effect to the extent that Bitcoin remains unco-opted by governments. What potential attack vectors do you think are viable for governments on Bitcoin at this point? Or if not an attack vector, a co-opt strategy?
Well, okay, so let's say a bunch of states and the U.S. government got into the strategic reserve business, right? And they're now controlling a large supply. Let's also say that in these states or in the country, as say the digital asset industry grows, something happens fundamentally that causes, let's say, a change in value, or there's a heist or a bankruptcy of one of these companies or something, and all of a sudden certain power players that have powerful lobby groups are like, okay, we need to either really pull in Bitcoin from the system, or release Bitcoin out into the system. And you need to do that. And here's, $10 million for your campaign. And you start having government playing, supply demand metrics with it instead of like a free market, and doing things that are against, say, a holder's natural interest, because they're not, the corrupt politician isn't holding the Bitcoin. It's the U.S. government's Bitcoin, right? But they might have a powerful constituent who wants XYZ done. And so now you start disrupting, and this goes back to what I talked about with manipulations in the treasury market. Once you start manipulating these things and distorting these things, it just starts screwing up everything. So if the value of Bitcoin starts to get distorted because government players are doing things against their invisible hand-free interests, because they're being paid off by some powerful person in some industry that thinks it would be good for this, or it could be a JP Morgan. It could be like, hey, this is getting out of control. People aren't in the banking system, and so there are things like in some of the draft language of some of the Bitcoin bills, like, so I've actually read through these bills, right? And you have to read the fine print in them, because if you just hear the headlines, like, okay, it's going to be set there, we're going to buy Bitcoin, but we can't sell any for 20 years. But then you read the fine language, except in cases, right?
Case of emergency. Government signature line. In case of emergency.
The way it's written, it's like except in cases to like pay down the debt. But money is fungible. Like, I mean, you say, oh, we're going to sell, $100 billion worth of Bitcoin to pay down the debt. But really that's because, well, we needed $100 billion all of a sudden to do X, Y, or Z, right?
Because they'll just go out and take out more debt.
Just take it out of that. So in other words, they can sell it at any time they want to.
Always a tricky language game with these guys. What do you think? Where do you put the over under or the risk of U.S. central government nationalizing some of these ETFs? Right, I think 10 of the 11 ETFs are all using Coinbase custody as their custodian. The one exception to that, I think, is Fidelity, who's doing a self custody model for their ETF. Someone could fact check me on that. But suffice it to say, there's a lot of concentration of the actual Bitcoin in the actual Bitcoin custodians behind those ETFs. That seems like a pretty ripe target for nationalization. What's the old saying that if you give governments more power in emergencies, then governments will engineer emergencies to gain more power. It's like all they really need to do is engineer some type of crisis, pandemic 2.0, and then all of a sudden, all that Bitcoin that you thought you had in the ETF now belongs to Uncle Sam. And maybe if you're lucky, you'll get paid out in some kind of CBDC that they'll fully survey and control and all those things. So, like, how do you look at the odds of something like that happening?
Yeah.
And what would you do to protect yourself?
Yeah. Well, this gets into, are you familiar with David Rogers' Webb and The Great Taking?
Yeah. I have. Yeah. We've seen his documentary.
And it ties in a little bit to that. Yeah. So if anybody's not familiar, basically, the entire United States commercial code was changed, I think it was in the 90s.
Yeah.
To basically stop like actual ownership of securities. So
the DTCC owns every equity basically.
Yeah.
And individual owners just have rights to it, but it's not actual full ownership.
Yeah.
Yeah.
And they have entitlements.
Yes.
So you get the dividends or whatever, but the actual owner, the Depository Trust Clearing Corporation, and within that corporation is a subsidiary, which is a partnership called Seed & Co. And they own like 70% of like U.S. equities or some a huge number. I might be off on that percentage. Yeah. But basically what it is, it's this overarching clearing organization. The idea is that you hold it underneath this, and then that allows for like under the table kind of bookkeeping entries that they can rehypothecate and loan and use as collateral for derivatives collateral and all these other shenanigans. And the guy that started the DTCC, who put all this in place in like the 80s and got this whole system started of a securities entitlement, and this is in the law and it's in the code in all 50 states of the United States Commercial Code, is, you know, it's interesting with this USAID in the media, because I did some research on the starter of DTCC. He was a CIA guy, you know, worked for USAID for a while, which is, you know, into CIA stuff. And then he starts the DTCC, and now they hold all of these. So let's say, and this, you know, Senator Loomis had recently done a thing where she's like, first we're going to do a stablecoin bill, then we're going to regulate crypto, and then we're going to possibly do a strategic reserve. Well, okay, let's say you regulate it as a security. So now do all of those Bitcoins that are in Coinbase accounts become securities entitlements. Wow, and now let's say that Coinbase expands and gets involved in, you know, derivatives markets, which are exploding and, you know, getting into place on Bitcoin, right? There's derivatives markets, there's options markets on iBit or whatever it is. And you have one of these collapses, like you now have a legal framework in place for these creditors to come in and claim that Bitcoin ahead of you as an individual, you know? Wow. And so it's all there. I mean, the legal framework is there for it all to be taken. Yeah. And then whose hands does that go into? It depends on what type of situation would prompt such a collapse of these derivative market holders. But you've got the DTC involved already, you know, and because they hold the mutual funds, you know, and so the tangled web that's being woven here when it gets away from, you know, your own account and you're holding that and you've got the seed phrase and it's yours and it's your key and you know, once you get off of that and, you know, a substantial amount are in the ether, if you will, which they are underneath these auspices, then all of these things begin to become, you know, possible. And that's a huge threat. Yeah.
That's a great point. Yeah. Well, clearly, as we say, not your keys, not your cheese. If you don't have Bitcoin private keys, then you just have a promise to Bitcoin. And those promises, not only, you know, the old saying, promises are made to be broken, but those promises don't even, to your point, in the wake of the DTCC and all of this change to it's the U.S. Commercial Code. Is that what it was? It was modified. Yeah. The UCC, that you can't even really own it technically, right? Like you can't. You seriously, you don't have what the term alloidial title has been used. I heard it from Dr. Jack Cruz, but this idea that you have full and total title to a thing, like that doesn't exist for Americans anymore. Do we know who the ultimate beneficial owners?
Really?
For anybody.
Europe, Euroclear, it's the same thing. Yeah,
you're exactly right. You're exactly right. Really, anyone in any fiat paradigm, which is basically every market in the world. Do we know who the ultimate beneficial owners of the DTCC or Seed & Co are? Do we know who's
behind it? Well, I do know,
like who are the actual shareholders of these organizations that own everything?
Yeah, and then the interesting thing is the Seed & Co, the reason it's a partnership is not like an LLC or an S Corp, is because I think it's under New York law. Under New York law, any single partner can authorize a transaction in a partnership. So one single person can authorize the transfer of like 40%, 70%. Yeah, I don't know the percentage, so don't quote me on it. But it's a ridiculous amount. Like unless it's like held by like the treasury, like a company treasury, or there are certain people, there are certain ways that you can do a direct investment into shares, and your name gets entered on the books and records of the company treasurer, right? So those are the official owners. Every public company. The treasurer has to maintain a record of who owns what shares. Yeah. And if you go to Apple and you look, who owns like 70% of those shares are going to be owned by an entity called Seed & Co. Wow. Now, who are the people and those names that have that authority? I don't know. It would be interesting for someone do a research project and find out exactly who they are. But it's shady business, and they never talk about it. They don't want people to know about it. You know, you're never going to hear it. So all of this stuff has really been built up over decades,
Yeah.
and it's not something that just, came about yesterday or with COVID. This has been a massive, in some ways, the only things you can own anymore are gold and Bitcoin.
Yes.
I mean,
Yeah.
what else do you own? You think you own your house? Well, you got to pay the property taxes on it every year, or it gets taken away.
This is why we belabor the point on private property till I'm practically blue in the face on this show. It's like, if you can't possess it and adequately defend it, then you can't really own it, right? It's like basically just defensible bearer assets. And even those, it's like you only own them to the extent that a guy with a bigger stick can't come and get it. And now there's a exception here with Bitcoin, because you get these very unique custody schemas like multi-key and multi. Yeah, exactly. So that can protect you from the what we call the $5 wrench attack. Forget all the complex cyber attacks. The guy just buys the $5 wrench and beats you over the head until he takes your keys. But if it's in a multi-key schema, not even the $5 wrench works. So. Yeah, that is a bitter and major psychological pill for people to swallow. Like, they think, oh, what I see on my brokerage statement or my mortgage statement, whatever, they're seeing the value of their house and their equities and their automobiles, business, and whatever. They think that's all theirs, right? And that's their net worth, and that they have the exclusive rights and privileges to all these assets that they've labored their entire life to create or obtain through trade. And it's just not the case, like provably not the case. And, again, it sounds conspiracy theorist, but would you point, where else would you point people besides the great taking for an elaboration of that point?
Well, I mean, the one thing I would say is, like people might be, oh, it's tinfoil hat stuff or whatever. But the thing is just because something hasn't happened in the last 60 or 70 years doesn't mean it hasn't happened in a dozen, 25 times in the last 1,000 years.
That's right.
And these types of great taking type scenarios
have happened.
They have happened, and they've happened very recently in other countries. Yeah. But even if you go to the United States in 1933, which is not even 100 years ago, Roosevelt confiscates all your gold, takes your gold, and then very soon after revalues it from $20 to $35. Yeah. That's a 75% change. Yeah. That's the government confiscating your wealth and writing it down 75% with a flick of a pen. And so to think that the United States or another power doesn't have it in them to essentially say, well, you know what, we're sorry, we have to confiscate everybody's shares, everybody's Bitcoins coming in. It's because that's the way the legal framework is, and we had to do it, and it's going to pay off this, and the other thing. And you're going to get, some sort of depository receipt type thing that's like 10 cents on the dollar, and that's what you're getting. Yeah. It can happen. Right. It can happen. Yeah.
Yeah, and there's no appeal, right? There's no higher court to appeal to in those situations, because it's the fundamental commercial code of the country that says you don't own this thing anymore. And like, that's just how it is. Yeah. And it's not fun to think about. People are like, oh, please don't say that. Don't talk about it. It's like, how you have to, like, if you're going to be a student of history, well, then you need to look at the things, even the things that you don't want to look at. Yeah. And we're definitely in that weird time where, people call it late stage capitalism. I think you and I would probably both agree that's simply not the case. It's more like late stage central banking or late stage crony capitalism or whatever you want to call it. But we're near the end game of this iteration of the experiment, as evidenced by a lot of things. But I think just the debt levels alone will show you that we're near a breaking point. Forget multivitamins and other supplements. Animal organs are the most nutrient-dense foods on the planet. You can get 100 times more nutrients from organs than you can from muscle meats. But the problem with eating organs is that they are difficult to find in stores, they are difficult to prepare, and even when they are prepared well, they often don't taste great. Thankfully, Heart and Soil Supplements has made consuming organ meats so much easier by providing powderized organs in capsule form. Organ meats include everything your body needs to thrive: vitamins, minerals, peptides, proteins, and growth factors. This is why organ meats were the most prized foods for our ancestors. Fortunately for us, Heart and Soil makes these treasured foods easily accessible. So go to heartandsoil.co today and use discount code BREEDLOVE to get started on your journey to optimal health and vitality. Again, that's heartandsoil.co, discount code BREEDLOVE. Have you ever wanted to start a business in the Bitcoin space? If so, then the Wolf Startup Accelerator could be for you. Wolf is the first startup accelerator dedicated exclusively to businesses developing in the Bitcoin Lightning Network. 4 times each year, Wolf brings teams from around the world to New York City to work with like-minded entrepreneurs, pushing the boundaries of what's possible with Bitcoin and Lightning. The program is designed to help early-stage companies achieve product-market fit, develop their brand, secure early-stage funding, and grow businesses that fuel the global adoption of Bitcoin. Go to wolfnyc.com to learn more or apply today. Again, that's Wolf, WOLF, NYC.com. The other thing that happens in these tumultuous times financially is you also get a lot of geopolitical reshuffling. Right? When one superpower starts to decline, well, the numbers 2 and 3 and 4, et cetera, start to rise up. And so, sometimes the trade wars escalate into kinetic wars. We've also seen a commensurate rising in tension in the past few years, particularly after the pandemic. A lot of money printing, a lot of supply chain disruptions, a lot of posturing, economic posturing, sanctions, all of these things. So all the tensions have been rising, and we've had the rise in some hot conflict as well. So if we're looking at, I guess we're looking at the United States, Russia, China, I don't know, anyone else you want to throw in this evaluation, how do you see the geopolitical landscape reconfiguring itself as a result of where we are today?
Yeah, I think we're going through one of those major reconfigurations, the likes of which we haven't had since World War II. And, I'll get into that a little bit, but yeah, just to your point, like that is when those types of massive things happen, right? Like in a status quo situation, the government tried to take away 10% of everything or 90% of everything everybody owns, or do a DTCC great taking. That's not when those things happen. You needed something like the Great Depression, where there's 25% unemployment and the economy is totally in deep depression, for them to do that revaluation. Or you needed in the Soviet Union, a communist revolution, when they come in and take the assets, or they nationalize things. So we need this. This is the danger, is we're getting to this time where this is what is money, and money is connected to everything, right? And the geopolitical and the economic are closely woven together. You're seeing it in, I believe, the Trump administration plan that's being done, but it's right now, it's the whole reordering. And it's an attempt, I believe, to kind of pull back from this global hegemonic system of the United States, pull away from Europe, pull away from Asia even, focus more on Western Hemisphere type stuff. And this is, what's dangerous about it is it's in this shakeup period time. And that's when, stuff happens, right? I forget the author's name, wrote an amazing book, but it focuses around like elites, counter elites, how there's like an overbreeding of counter elites that happens periodically. And what happens is it's like a reverse game of musical chairs, where there's only so many power positions in a society. And as the elite class grows, the competition for those chairs gets more and more intense, to a point where normally the elites can get along and play nice with each other. But when the chairs competition gets so heated, you get the rise of the counter elites. And these are actually population demographic type things, where you get too many people that are kind of born into elite circles, and they're wanting to continue in that, and the power seats aren't just available. And you see what's happening with like AI and different things. You could even see that accelerating. I mean, like in our country, for example, we have the same number of Congress people as we've had for a long time, but how has our population grown? The number of ultra wealthy grow. And they all want to get into these power positions, and you get these cycles. And he learned about this from looking at insect colony collapse. where he couldn't figure out like why are these healthy, successful colonies growing like gangbusters and then they collapse. And it was like basically certain insects that were responsible for like higher levels of the colony, they overbred themselves and then they kill each other. And then when they kill each other, like everything else collapses below it.
Interesting.
And so, and he tried to time this by looking at birth rates. And it's like, okay, guess when like France had like a huge birth rate expansion and the over elites happened and then the French Revolution happened, and go back through history and notice these correlations between demographic growth of elites leading into these moments, because it was really the elites that drove it. It wasn't the common man getting the short end of the stick so much that he revolted on the streets. It was actually driven by elites not being able to perpetuate their elitism.
Interesting.
Because of the lack of power positions available that drove to these things. And so if we're driving into something like that in a geopolitical landscape, I think there's a path and a hope that we can get through it without a world war.
Yeah.
But I personally believe if nuclear weapons didn't exist, we'd have already entered into massive global wars. Like there's a lid being kept on things because of that threat. And so this is kind of a little bit uncharted territory, that we're going into. The first, maybe one of these overheating of this elite cycle in the nuclear age. And so how it's all going to turn out, I mean, that's a question for the ages. I have thoughts on it, but it's a whole nother thing to get into, which we can. But
that's a fascinating perspective.
That's where we're at.
I've never heard of that, but it does resonate a lot with just this idea that economic scarcity is one of the prime motivators for conflict. Like we can sit here and get along and have a nice conversation, but if you strip two people naked, throw them into the middle of the jungle in the middle of the night, it's like, well, they're going to lose their manners pretty quickly, right? They're just going to kind of shift into basic survival mode. So that's because that's a situation and conditions of acute economic scarcity. People will start to behave much more like animals versus in a conditions of relative economic abundance, we act more civilized. But the reason that resonates with what you're saying is because there's rising demand for these few seats of power, right? In terms of a growing population, but the proportion of those seats is fixed basically. So the proportion is actually shrinking relative. And I guess a healthy response to that would be the societies would fork, right? You'd kind of have like, oh, maybe country A becomes country B and C, and then they each have their own little circles of power. So they increase the number of seats and reduce the scarcity of those positions of power. But something is preventing that. I don't know, maybe we're back to the money printing kind of driving centralization rather than enabling decentralization. And that seems to be pretty scary because I don't know. I mean, we'll see. Like, do you think we could see nations start to fragment? Like, I'm thinking now of Soviet Russia, when it went bankrupt, it basically shattered into the 30 some odd countries. If we do have these nation state bankruptcies, which Bitcoin again could be an accelerant to, maybe we will see some of this fracturing of nation states into more countries.
Well, I think you will. And I think it does tie into money, and it does tie into the money printing, right? Because the more the money printing, the more you're getting the situation of wealth inequality, right? And so the number of people in these elite positions, there's a Wall Street Journal article just today about the explosion in the number of billionaires, right? So you've got these same number of power seats. When Forbes first started doing the rankings, it was 200-300 billionaires in the world. Now there's like 3,000. And then they're like the rise of the super billionaire. And there's like 24 people in the world with wealth over $50 billion when, not too long ago, nobody had 50 billion.
Yeah.
So you're getting this expansion of the elites. Now, how could we fracture in, nation states? Yes, that's possible. But even in our own country, right? I could see, and I think it's starting to happen, is a greater differentiation state by state.
Oh yeah, that's already for sure. Texas is a different country than New York right now.
And people, at least we have a little bit of a nice release valve, right?
Yeah.
Like you could be like, hey, I can't stand the red side. I'm going to a blue state. I can't stand the blue state. I'm going to a red state. And we're seeing migration. We're seeing migration within the state.
There's more migration to Miami than any other city in the country post-pandemic.
Yeah,
Like people from New York
insane.
and LA just
yeah.
pouring here.
And a lot of that is economic, but it's also political.
Yeah.
And then what's the difference between the economic and the political in one sense? So we're getting that. And then in other places that aren't fortunate to have, the third largest landmass, the United States, third largest sovereign nation on the planet, where you can move to different parts and have a totally different set of rules and laws and cultural norms are different. You are going to get into trouble. And I think, in Europe is probably where that gets really dicey, right? Because a lot of those countries are highly populated, highly dense, but they don't have tons of land.
Yeah.
Now they have the EU. So maybe we start seeing people say, well, like I'm born Spanish, but really I want to be in a more like free market orientated place and I'm moving to Poland or, so we're seeing that some of these Eastern European countries that are part of the EU really thrive. Like Poland, like other than China, I think they have the best GDP growth in the last 10 years. Wow. They spend over like 4 or 5% on defense. They have like a free market economy there. They have, cultural norms that people respect and they don't have that. They have a cultural homogeneity that's also created by their Roman Catholic allegiance that most of them have. And so there's a cohesiveness there. And so I think we will start to see that. And there is a lot more migration in the world. And so maybe that's a hope so that it doesn't have to, come to guns blazing, is that it's a lot easier than it was 150 years ago to go move to another nation or another state. Yeah.
No, that's a good point. I mean, physical mobility obviously has been augmented in a positive way by technology, airlines and et cetera. People's ability to discover one another and to discover the right place to live has obviously been improved through digital technologies and whatnot. So maybe we do get more of a self-organizing impulse in the world, which that seems like it could be a good thing for social cohesion. I don't know. I still don't know if that would lead to the existing nation states cohering more strongly, or that would lead to, because, I think it's in Texas's state charter that they can secede and become their own country. And, there's already been this conflict between Texas and the federal government about the immigrants coming in from Mexico. Like if you get a few more of those conflicts, you probably just see that happen. And then if Texas does it, you've now set this precedent for all these other states that are like, you know what, we've had enough of this. Yeah. And then you start seeing it in the United States. Maybe you see it elsewhere. I don't know. Like it's again, these are scary thoughts for people. They're like, they can't handle it. They want there to be stability in, the way the world is organized. But again, I hate to be the bearer of bad news, but that's just not the case, right? It's just not the case that this thing is, changeable, to say the least.
Lines on the map change all the time, and I don't know how it ends. I think these are release valves, like, kind of mitigation strategies that are available short of these massive like succession from countries or civil wars or things. So, but I do see, and you see it, it happens in social media, it happens in like a polarization and a more, desire to, move away from, like, I think John Mearsheimer talks about this really well when he talks about it's like you have this fundamental disagreement on first principles. And if you're coming at things with fundamental disagreements on first principles, it's very hard to resolve that, right? And at one point in time, maybe there was like a overarching Christian ethos or something, or there was something that harkened back to a similar first principle. And once people just have wildly divergent first principles, somebody, atheist type principles,
monotheism, polytheism, something like that.
All these different things are, or collectivism and individualism and socialism and economic first principles. And how important should equality be versus, freedom or liberty, and how do you do those trade-offs? And you start getting the disagreements on those first principles. They're not really reconcilable by reason. And so you get into a situation where maybe the best thing, the least violent way to handle it would be people go do their own thing in their own places. And, I'm not sure that would necessarily be a bad thing if it was handled peacefully and done well. But on the other hand, you have these power structures in place, right, that don't want that fragmentation to happen because it's their fiefdoms and their
tax base.
And so I think it's a little naive and optimistic to just hope that everybody's gonna, find their own place where they got their groove on, and it's just gonna all work out.
That's back to kind of the tax revolt topic. That there is this inherent tension that wants to pull some of these jurisdictions apart, but there's the top down, the tax authority basically wants to keep it together because that's a larger customer base. If I'm using customer in big air quotes here, tax base. And so, I guess, and this is where I think books like The Sovereign Individual really get to the heart of the matter when they talk about the economics of force or violence or coercion. It's like, how economically efficient can the tax collector be in extracting from its tax base? And if the enforcement points become too wide, or if the manner of preserving purchasing power becomes so difficult to extract from, right? Like Bitcoin's a highly defensible bearer asset, right? It's really hard to steal, as we touched on earlier. Well, that starts to throw off the calculus of taxation. And then that top-down pressure isn't going to be so good at cohering a tax base. And maybe we will see more fragmentation.
Yeah, exactly.
I don't know. It's very fascinating to think about. So you mentioned earlier this the confluence of some of these inflationary forces and deflationary forces. And you, in preparing for the show, you mentioned this strategy that Trump is running. I don't know if you named it this or they're calling it this or what, but the fire and ice strategy that is related to this confluence of inflation and deflation. Could you tell us about what is that? What are the, I guess, obviously revisit the inflationary and deflationary forces, and what is it? What is the fire and ice strategy?
Yeah, I mean, it has the deflationary ice components to it and inflationary fire components to it. And I named it that, although there was a Morgan Stanley analyst like 20 years ago or something when he was looking at certain, inflationary aspects of the economy and deflationary going on at the same time, called it a fire and ice economy. So I think what Trump is running is a fire and ice geopolitical, geoeconomic strategy, where he's got a number of inflationary forces on the one hand that he wants to put in place to enact his vision, and a number of deflationary forces on the other. And then I think like a metaphor for it might be like, let's say you've got a pot that you've got it around 130 degrees or something, some logs underneath it. And you don't want it to get so hot that it boils over, but you don't want it to get too cold. And like, if someone starts adding logs to the fire, you can keep that temperature where you want if you add some ice to the pot. Or if somebody's adding ice to the pot, you can keep that temperature by adding logs to the fire. And I think he's trying to do this really delicate balance where he's got inflationary aspects, which are things like monetization of assets, like perhaps the nation's gold, keeping low interest rates. Bretton, his Treasury Secretary, is really trying to keep the 10-year low, and I think they're going to be doing, Treasury actions in order to make that happen in reality. And actually, we've seen the 10-year bond lower every single week in yield since Trump took office. We've got, Doge stimulus checks being talked about. We've got tax cuts, and tariffs could have one-time price increases. So we've got all those inflationary aspects on the one hand, and then he's also gunning full speed ahead with a bunch of deflationary things like deregulation. They really want to keep the oil price low. That's a big part of what I think is driving this desire for a Russia-Ukraine settlement. Wall Street Journal had an article out a couple weeks ago. Like, if that conflict gets settled, could be a 5-10% decrease in global oil prices. There's, kind of Doge activities. Cutting the government size is very deflationary because of the fiscal impulse, which has been propelling the economy. And then lastly, you've got the whole AI automation thing going on, which is also deflationary. So you've got all of these things in the mix here, all these logs under the fire and all these ice cubes going in the pot. And the market is confused, like what's going to win out, what's going to happen. And I think what it is a very desperate, like thread the needle type strategy, but it's kind of a desperate times call for desperate measures. And so I think the writing has been on the wall that this monetary system is collapsing, the debt burden's unsustainable, The money printing's out of control. And I think the attempt is like, we're going to do all of these kind of inflationary things to kind of keep things propped up. But at the same time, we're going to be, unleashing, with deregulation, with bringing, actual manufacturing back to the US and all these other things that can kind of create nominal GDP growth. A big component of that will be inflation. A big component will be real growth. And by that nominal growth, a hope to bring down, debt to GDP levels and things like that, which would either solve the problem or at least allow for the system to perpetuate. Because if something's not done, this whole thing, I really think it's like got a 4 or 5 year time frame before it just collapses.
Wow.
And the main reason for that, really quick, is just that is when the Social Security Trust Fund runs out. So
In 5 years.
yeah,
Okay.
When
So
it starts
this is
getting,
2030.
yeah.
Okay.
When it starts getting dangerously low, if you look at, so the government scores it every year, and they always push it back a couple of years. Like at one point it was going to be 2030, then it was going to be 2031, 20. I looked at the most recent one. They're calling for 2033, and that was a recent pushback of a year. But then you read, well, why did it get pushed back? It's like, well, we changed the assumptions that less people were going to need disability. We changed this. So they're manipulating these assumptions, but I think the real number is about 5 years.
Yeah.
And when that happens, we're running, the January monthly treasury report came out a couple weeks ago. We're running an $840 billion deficit so far, fiscal year 2025. That's in 4 months.
Wow.
October, November, December, and January, because fiscal year starts October 1 for the government.
Jeez.
4 months, $840 billion. Last year at this time, it was like 510, 520, to like a 58% increase.
And has
Year over
the
year.
Doge cuts have not taken effect?
They
on
haven't
that number
taken
yet?
effect,
Okay.
but there's no way for fiscal year 2025 we're not running a $2 trillion deficit.
Right.
We're going to blow out anything Biden did. We're just on this trajectory.
Yeah.
And even with Doge and saying they're laying off people, but you're going to get benefits and pay until when? September 30th, the end of the fiscal year. I think 2025, at least fiscal year 2025, anything that happens, the administration is going to be out there saying this is the Biden economy. And it's kind of like kitchen sinking a quarter for equities for a CEO of a company. They're basically front loading some bad news stuff into it. That's why they want a $4 trillion debt increase.
Yeah.
I mean, if they're going to be balancing the budget soon, why do they need it? So all these things are going on, and that's what we're in the midst of. And I think when we get to the other end of it, it could be very positive. But there's going to be this uncertainty, and markets hate uncertainty, and that's why I think you're seeing some crazy stuff. You're seeing Bitcoin, you're seeing stock markets don't know what to do. You're seeing this happen, and I think that it could be spicy in this first half of the year. I think we could see things go down, in equity markets 10, 30%. I think Bitcoin's very interesting where it's at right now. And Dennis is sure to talk all about where the Bitcoin price exactly is going to go, and who knows. But, I think there's just a lot of, money being moved, and all of those components are really what's driving this, and nobody knows exactly how it's going to shake out.
Yeah, I'll say. Would you rather have 1 Bitcoin today or 2 Bitcoin a few years from now? Bitcoin mining is a tried and true strategy for accumulating Bitcoin. Over a 2 to 4 year time frame, successful miners have consistently accumulated more Bitcoin than they otherwise would with a traditional dollar cost average strategy. Blockware's mining as a service enables you to start mining Bitcoin from your laptop. Blockware handles everything from securing the miners to sourcing low-cost power to configuring the mining pool. They do it all. Plus, with Blockware's one-of-a-kind mining marketplace, you can buy and sell live Bitcoin miners with just a few strokes of the keyboard. In this marketplace, buyers get to purchase live machines at vetted facilities, enabling them to mine with zero lead time. And sellers get the opportunity to liquidate their machines and hosting contracts at will. This means you can mine Bitcoin with zero long-term commitment and high liquidity on your mining rigs. Blockware will even cover your miner's energy bill for the first week of each of your mining rigs, when you sign up at mining.blockwaresolutions.com/breedlove. Again, that's 1 free week of Bitcoin mining at mining.blockwaresolutions.com/breedlove. Bitcoin custody is evolving. Both self-custody and single third-party custody come with significant risk and trade-offs. OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your setup. OnRamp secures your Bitcoin in a segregated cold storage multi-key vault guarded by 3 independent institutional-grade custodians, none of which have unilateral control over your keys. Your funds are fully auditable on-chain, cannot be rehypothecated, and can only move or be withdrawn at your explicit direction. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. Bitcoin is money, and as the price continues to appreciate, OnRamp helps you seamlessly tap into financial services like trading, inheritance, insurance, loans, IRAs, and more, all without compromising on security or accessibility. Schedule a consultation with the OnRamp team to learn more at onrampbitcoin.com/breedlove. Again, that's onrampbitcoin.com/breedlove. I've also heard, this was a couple of years ago at this point, that we were basically reaching a point where we had to print money to pay the interest on the existing national debt.
Mm-hmm.
And the term that was used there was money balling the interest. And historically, when you look at other countries that had done this, this was, I don't know if this was I don't know if this was a fact that had no exceptions, or this was just like a very strong correlation, let's say, that tended to be stage 1 of hyperinflation for a country. Once they had to print money just to service the existing debt, it's, you know, the rough analogy is like if you had, you know, you had a $500,000 credit card balance outstanding and you had $100,000 annual income, and say you're, you know, paying 20% interest on that. So you're paying you're literally, all of your income is going. In this case, it's not even your income, right? It's just, you're actually, it's beyond your income. They're printing the money to pay the debt. So does that factor into this collapse? Or are you just solely pinning it on the Social Security fund running out? Like, are there other factors playing into this?
The reason why that Social Security is interesting is because it's kind of like a cliff, where it's like Hemingway said, how do you go bankrupt? Slowly at first and then all at
Gradually,
once.
then suddenly, yeah.
and right now, we're not having to issue any debt at all to pay Social Security.
Yeah.
It's being completely paid by draining funds from the Social Security Trust Fund, which is just debt, treasury debt is what's in the trust fund. It's not treasury bonds. It's a special treasury bond that's only sold to the Social Security Administration. But anyways, it's government debt. But between already existing debt in the Social Security Trust Fund and all the money that comes in from everybody's paychecks, we're able to pay it. And in around that 2030 timeframe, all of a sudden it's like 1 month, everything's paid for, and then all of a sudden, oops, that whole trust fund is bankrupt, it goes to zero.
Wow.
How do you make up the difference between what it costs to keep Social Security checks going out and the paycheck money coming in? And that's like an immediate 25, 30% cliff, where now all of a sudden, so imagine like all of a sudden, like you just never had a bill and you're barely, you know, hanging on with a bunch of credit cards.
Yeah.
And then all of a sudden you get a new like $5,000 a month bill that has to be paid every month. That's going to put you in a world of hurt. And that's kind of this thing. Now, to get back to your earlier point, which I think is really interesting about, you know, when do these countries start to go into these collapses? So there's 2 things to look at. One is kind of declines, heavy declines starting when the countries are spending more on interest than they are in defense, which we started last year.
Okay.
And then the other one is, you know, printing money, you call it money balling, to cover interest. So, you know, the way I like to look at it, other people look at it slightly different ways. Like Luke Groman will call it like true net interest expense, and he'll include entitlements with interest and defense.
Okay.
I like to look at it like what can't we really, cut without like riots on the streets, right? So I would say like, defense, Social Security, Medicare. I'd also throw in, veterans benefits, right? Like we're already not doing everything we could for our veterans. And so when you look at those things and you say, okay, let's say we're not going to pare back on those, when those mandatory spends, right, where over 100% of your tax receipts are going to cover your mandatory spends. That's when the inflation, kind of really starts to hit home. And that's where we're at.
Right.
We're at like 90% of tax receipts to cover those mandatory things. So you could get rid of everything else. You could get rid of the Department of Transportation, education, Interior, Homeland Security, like all of those, and you're still running a deficit now.
Wow.
So that's where we're at.
And I assume that proportion is incrincing, right? You said it's 90% now, but it's probably up over the past several years and headed higher.
Increasing massively. Biggest driver has been the cost of medical care. And the other big driver has been actually veterans benefits have been going up a lot for that. And also Social Security given, demographics. And, I think to cover this, the fire and ice strategy to make it work, like there's going to need to be, new winners and losers. The United Healthcares of the world aren't used to being the losers, but that's who they're going to want to be a loser in this situation. Like they're going to want the pharmaceutical companies to be losers and negotiate drug companies and try to protect, that the Social Security benefits don't get cut back. So, this is kind of the big fight that I think is going on, and the entrenched interest, and why the stock market might not like a lot of these things, even if they're good for, the construction worker in Tallahassee. We're going after, some of the sacred cows in the economy here, which have been profiting off of, all of this exaggerated government spending. And a lot of it has been going into the healthcare administration industry. You can look at the number of administrators that have gone up relative to practitioners. There's just a lot of fat in there, and a lot of people getting rich that aren't going to like it if we go in there and try to do something about it.
That's a great point. I mean, this is what it sounds like, the breakdown of the post-Bretton Woods era, right? The culmination of World War II is we had the Bretton Woods Agreement, and that's already kind of broken down, right? The 1971 Nixon shock was the first, maybe not the first, but a major step in the breakdown of that global economic order. Is this just the continuation of that we are now going to have to go through a Bretton Woods 2.0, or do we have to go through a World War III to get to Bretton Woods 2.0? Like where's this headed in your estimation?
Yeah, I mean, I think it could possibly be an explicit new Bretton Woods, right? Like where it's not just backdoor stuff, which has already been going on. So yeah, we had the Bretton Woods system like 44 to 71. Then we entered what is often called the post-Bretton Woods era. And now we got the breakdown of the post-Bretton Woods era. So I don't know, it's actually more of a Bretton Woods like 3.0, or there was never a Bretton Woods 2.0, but we moved into something else. Yeah. But it never was clearly defined. It was amorphous.
From a gold standard to a petrodollar black gold standard. Something like that, yeah.
Exactly. I mean, we were sending plane loads of gold over to Saudi Arabia. France was sending warships to the New York harbors to convert their dollars into gold. We had something like 18,000 metric tons of gold at the end of World War II. We whittled that down to like 8,000. We have 8,100 metric tons now. And so the system just got untenable, broke down. And the Saudis really didn't want to take, the treasury bonds, right? They liked their gold, and that's why we had the oil crisis, because they weren't going to send us the gold. And I think it was Nixon, it might have been Carter, but one of those presidents. I mean, they had the DoD, the Department of Defense, start drawing up invasion plans for Saudi Arabia. Wow! And it was put to them, plomo or plata, like you're giving us the oil and taking our T-bonds, or we're coming in. And that's actually known as the Carter Doctrine,
Wow.
which is that oil security, energy security for the United States is a justifiable reason to employ the United States military. Jimmy Carter just passed. I mean, that was one of his most well-known things at the time, the Carter Doctrine. So this has been the situation at play, where the U.S. has been able to, through whether threat of force or, at one point in time, Treasury bonds were paying a good yield, actually, because the Saudis were getting like 10%, and there might have been like 6 or 7% inflation, when we had those really high rates in the 80s. But as the real yield on those bonds, which we talked about earlier, there's no real yield to them because of the inflation. And just to be clear, like economists will say there's a real yield because CPI is like 3.5 or 3% or 2.8, and the yield's 4 or 4.25 or whatever it is. But the CPI numbers are all juice. Yeah, exactly. I mean, if a brand new home in San Francisco costs, like $18,000 in 1971, and you adjust that what's $18,000 adjusted by CPI inflation today? Like $180,000. A new home in San Francisco doesn't cost $180,000.
Costs probably 10x that. Right?
Yeah, exactly. So those CPI numbers are bogus. So in order to get a real yield, what did people start doing, right? The BRICS countries started buying gold, going into the London market, going into the New York, and into the COMEX, taking physical delivery, and putting in place like a new monetary system. And so the Western economies have been hesitant to do that because it's an admittance of the weakness of the dollar system. And once you start saying like, oh, we're going to start buying gold again, like, why is the U.S., you're the U.S., why are you buying gold? So I think that in Scott Bessent, in a Manhattan Institute interview, he said, this was before he was nominated Treasury Secretary, said, I think we're going to need a new Bretton Woods, a new global economic reordering in the next 4 years, and I want to be a part of it. So he said he wants to be a part of it. He said it's coming. And I think that, everybody's known this has been happening. It's just the quiet part people aren't saying out loud. And that they're starting to say it a little bit out loud, and that we could see in the next few years, the out loud just get explicitly stated. Like, we're revaluing the dollar. We're going to back it with a sovereign wealth fund, which is going to include things like gold or Bitcoin. We're going to have, something that, something that's a more of a neutral reserve asset behind the scenes. I think we've already got that with Bitcoin. But, the government's got to co-opt. It got to bring things into play in order to also keep those reins of control and power over us. And so they're going to try to reorder and rejigger the system once again.
So I want to ask you specifically what that looks like in your view, that if we do, re-back, or I guess just back the dollar with this sovereign wealth fund that will contain gold, commodities, Bitcoin, et cetera, what that looks like mechanically, how they roll that out. But before you answer that, I think is kind of an entry point to that. Elon, the Doge committee, whatever, they're talking about auditing Fort Knox right now. So the 100 metric tons of gold that we supposedly have may or may not be there, and we may or may not know, we may or may not verify in short order if that is true. So I guess, how do we roll out that system that you're describing, and then what, kind of give me the two different scenarios. If the gold's there, it looks like this. If the gold's not there, it looks like that.
Yeah. Well, so Bessent said they wanted to roll out and have this thing set up within 12 months, the sovereign wealth fund. So they're going to take a little bit of time with it to figure it out. I think the first step would be like a remonetization of the gold. So, the gold was set in 1974, I believe, was the last time it was revalued. It was either 73, February of 73, I believe, at $42.22 an ounce. And that was done by presidential proclamation, executive order, just saying gold used to be, because Nixon had already raised it from 35 to like 40, I think, or something like that in 70 or something. Now he's raised it again to 42.22. So you would have the president come out and say gold's now worth $3,000 an ounce, let's say. And the way
he'll set the price, not marked. It won't float on the market rate. It'll just be a pegged price.
Yeah. So it gets into like different statutory laws. So there's different laws involved in this. There's the Gold Reserve Act of 1934. There's actually goes all the way back to something called the AAA, or the Agricultural Adjustment Act from the 30s. And there's a specific component of that act called the Thomas Amendment. It was actually called the Inflation Amendment when it came out, which was what allowed FDR to inflate with repricing gold from $20 to $35.
Okay.
So that's where the presidential authority to revalue this gold comes from, this thing called the Thomas Amendment, which is part of the Farm Bill, or the Agricultural Adjustment Act, it's known as. So now that amendment actually limits the amount of revaluation that the president can do to like 100%. So if it's 42, it would be like $84, right? So I don't know if he'd have to do like 6 executive orders, like from 84 to 168, and eventually get it to what he wanted, or if they'd throw it into a bill somewhere and say the president can revalue, gold to whatever amount or whatever he wants. But once it's revalued, it becomes a statutory amount.
But
and
it
has
needs to
nothing
get,
to
it would
do
have
with
to
the
get
mark.
marked.
It doesn't. No, it doesn't have anything.
Oh, it just
to do
mark
with
it
the
to whatever
market.
he wants it to be.
Whatever it could
Higher
be,
or
10,000, 2,000, anything. And the way the Federal Reserve Bank's accounting manual is written, and it's in Section 210. It's a PDF on Google. Anybody can find it. And the Federal Reserve accounting manual. It says the Secretary of the Treasury has the right to monetize the nation's gold, like submit new gold certificates, and the Fed has to deliver to the Treasury the difference between the new valuation and the old valuation, and the Treasury puts it into the Treasury General account. And it's just it's money printing, and it's like monetary. It's gold QE. It's money printing by the executive branch instead of the Federal Reserve.
Right.
Because theoretically, the only way the Federal Reserve could pay for this would be to print money, unless they went into the open market to sell Treasury bonds that they own. Now, what would Powell do if he's presented with this, essentially a demand for payment on the nation's gold revaluation? Would he sell bonds, or would he print the money? Besson has breakfast with Powell every week. He could clear that. If Powell doesn't want to print the money, Trump's going to be able to put in whoever he wants in May of next year. At that point in time, he could put someone in who he knows will print the money. And now what you're doing is you're having a power grab from the Fed. You're having the executive branch taking that monetary lever away, and then being able to basically print money on demand. Anytime they want to print money, they revalue the gold certificates. The framework's already in place, and they can stimulate the economy that way. So,
but the ceiling would be gold's market price, right?
No, it wouldn't. It would not need to be gold's market price.
Well, what I'm saying is, wouldn't that be a ceiling on the money printing though? Because then once you started printing it above, you revalued the gold certificates above gold's market price. Wouldn't arbitrageurs just wash that out somehow?
Well, no one can. The United States is not going to sell their gold.
Okay.
What it is this doesn't make any sense.
It doesn't make any sense.
It doesn't make any sense.
What's so hilarious to me, by the way, in the back of my mind, is like, no wonder they won't let this thing be marked to market, right? It is still the most important asset in the world from a geopolitical standpoint, right? That's why they don't want it to be marked to market. They want its price controls on the most important asset in the world. So it's hilarious that we call ourselves free market capitalists in this country. We have price controls on the most important asset in the world. Right now, it's sitting on their balance sheets at $42 an ounce. It's trading at what in the market?
$2,900.
$2,900. There you go.
Yeah. And the thing is it's all because the accounting in the law, the way the statutes are written, it specifically states based on the statutory value of gold. The statutory value, based on what I mentioned before, the Thomas Amendment, is whatever the president says. And that doesn't mean that the government needs to go in there.
This is like the essence of fiat, right? It's like, ignore everything that's real. Whatever I say is real, basically.
Essence of true fiat, where money is, it literally is whatever whoever has that Oval Office says it is.
Yes.
That's what it is.
Crazy.
And then the Fed, by law, so what happened was there was a point where the Treasury custodied like the gold.
Yeah.
And they, for no real apparent reason, so the Federal Reserve had gold. It was transferred to the ownership of that gold was the United States Treasury. And the Treasury issued these things, these gold certificates. And so these are terms that are in law, in bills that were written, that were passed by Congress, signed by the president. So this is all statutory. So these gold certificates, although, who's ever seen one of these gold certificates, or They actually exist, and there's a mechanical process where the Treasury issues new gold certificates, and this is actually in Senator Loomis's Bitcoin bill. This is how she wanted to pay for the strategic reserve, is this revaluation of gold, where in the bill it's required that the gold certificates be reissued. In the bill, it's stated that they should be reissued at a valuation of market price on whatever date the Treasury Secretary elects. But that's just, that's just the way it is. Yeah.
But any date, picks any date.
Any date. Yeah. Well, it could be a future expected date.
Yeah,
right. But there's no limitation that the bill language needs to be written on at market price. That's the way it is in that bill. And so, the Treasury then submits these things, and then again, according to statute, the Federal Reserve must remit the difference between the old valuation and the new valuation to the Treasury within a specified time period. And so that's the way the law is written. It's a mechanical thing, and it's a way to get money into the Treasury's checking account, the Treasury General account. And this is what the dollar is, right? It's created out of thin air.
So to back up a little bit then, if the gold is not in Fort Knox, that gold would be the gold the Fed would be transferring to the Treasury, right? I assume.
There's no need for a transfer of the physical gold. The gold doesn't even need to be in Fort Knox. I mean,
well, at some point we got to verify that the gold exists, right? Does that not play into this equation?
Why would we need to do that? Why would we need to go in there and assay the gold and audit the gold? It's these gold certificates that are getting revalued. I mean,
it's so crazy. This makes no sense to me at all. It's just a total la-la land. You just make up whatever price you want. Doesn't even matter if the asset's even there.
Yes.
How is that possible? How does that not? Okay, that definitely breaks down at some point.
Yeah. Well, that's what.
How does that break down?
How does it break down? When countries like China and India start buying a lot of gold, which they have been buying futures contracts and saying they want physical settlement, they want the bars delivered, and the actual physical gold starts moving there because, see, you have this whole system that's set up. It's orchestrated by the Bank for International Settlements in Basel, Switzerland. You can go into BIS reports and it'll have so much information on their gold leasing activities.
Yeah.
Gold leasing. It's a huge thing.
Yeah.
And the Bank of England holds this gold and the Fed holds this gold, and then they lease it out to their counterparties, places like the bullion banks, which are like Goldman Sachs and JP Morgan. They're the ones who go into the futures market and short it because if they have to, they feel they can physical deliver with this leased gold they have title to.
Yeah. And
so you have a whole hornet's nest. Now, Trump says he wants to audit Fort Knox, but I mean, how do you do like a true audit, right? You okay, you go there and there's a vault, and then there's a sheet on there and it says there's 2,800 bars in this vault. And you look at it and you're like, oh, okay, it looks like, are you going to have somebody actually X-ray those bars, make sure there's not tungsten inside? Are you going to have somebody check the social security number of every bar? Is an audit going to be a quick tour around the vaults and it looks like it's all there? Or is it going to be like a true audit, which would be to put those bars through what it takes for gold to be accepted by COMEX for delivery? So COMEX, the Gold Futures Exchange, will charge an amount if you want to put gold in the COMEX vault, and they'll do all that. They'll assay the purity, they'll check the security number, serial numbers, they'll make sure there's not lead or tungsten or something, in the core of those bars. So all of that, I don't know if that will really be done. And just to be clear, it's not all in Fort Knox. Supposedly a bunch of it is in the mint at West Point and Denver and different places. And according to the Federal Reserve, in their vaults, they hold each bar by serial number. They do not consider gold bars that are deposited to be fungible, which is at least is a good thing, but it says that on their website. So do all those, do all those security serial numbers actually match up? I doubt we'd ever see an audit at that scale. I think what we'd see is a photo op where Trump and Musk go down to Fort Knox and walk around in front of a bunch of bars and they say, it's all there. We can issue the new certificates.
But if I'm hearing you correctly, there's no substantive difference if it's there or not. If they go down there and do the photo op and say, hey, it's all gone, or hey, it's all here, that doesn't change anything other than public optics?
Well, it would need to be there to give legitimacy to the gold certificates. Like these gold certificates are allegedly revaluing this.
Right, but technically, if you got one bar, they can mark that to whatever price they want it to be, right? Oh, it's $1 trillion gold bar.
Yeah,
whatever.
The $1 trillion coin. They've talked about that. Yeah. That's what they've talked about. So precisely.
So crazy.
And so
this is so clown world. This is so clown world.
This is it. This is the world we live in. Once the whole system broke down and we got rid of, any type of realistic monetary base, then it's only a matter of time before the argument goes to the logical conclusion.
Yeah.
Which is that it's make-believe land.
Absurdity. Yeah, absolutely. One of my highest health priorities is keeping my brain in top shape. To take care of my brain power, I do many things, such as striving to read, write, exercise, and meditate daily. One of the latest tools in my brain power toolkit is MindLab Pro. MindLab Pro is a nootropic supplement that is scientifically proven to enhance your brain power. When I take MindLab Pro, my mind feels like it has a better grip on the world, my thinking is more lucid, and the articulation of my speech is radically improved. MindLab Pro has been tested in rigorous, double-blind, placebo-controlled human trials and has been proven to enhance brain power for users in every age group. MindLab Pro is an advanced formulation of 11 nootropic ingredients and is backed by research from over 1,400 human trials conducted over the past 32 years. So if you're looking to enhance your brain power, MindLab Pro is an excellent solution. Go to mindlabpro.com/breedlove to start enhancing your brain power today. Again, that's mindlabpro.com/breedlove. Knowing when to buy Bitcoin can feel complicated, and knowing how much to buy can be overwhelming, and getting started can be a headache, but it doesn't have to be. That's exactly why I recommend Coinbits, because it solves these major blockers and it's the easiest way to buy Bitcoin. With Coinbits' Round Ups feature, you can automatically convert your spare change into Bitcoin while you shop. For example, when you buy a coffee for $3.50, the extra 50 cents is rounded up and it goes straight into Bitcoin. Here's why that's a huge win for you, because you don't have to be a tech wizard or try to time the market just right with Bitcoin. With Coinbits Roundups, you simply set it, shop, and stack sats. And you can set this up in under 2 minutes. Just visit the website, connect your card, and boom, you're buying a little Bitcoin every time you spend money. So stop wasting your time with complicated exchanges or confusing shitcoin apps. Coinbits simplifies your Bitcoin savings strategy. So go to coinbits.app/breedlove. Again, that's coinbits.app/breedlove. I guess mechanically, how does that work then? We still all use the same US dollar, but all of a sudden the US dollar would be redeemable for shares in a sovereign wealth fund? Like how does that backing, the sovereign wealth fund backing look in reality?
Yeah. So like walking through what could be a mechanics to try to put forth another illusion of the dollar being backed, right? Because in reality, there's no way to truly back it with meaningful, so it really would be like the insertion of a new shell game from a prior shell game. Right. And so I think the shell game that would be presented would be like, look, we always talk about the debt. And they've said something like this, like, but we never think about all of the assets. So then let's say they create the sovereign wealth fund and they say, okay, we've got the confiscated Bitcoin that's going to go in there. We've got the gold that's worth, 800 billion or whatever, that's going to go in there. But we've also got all these federal lands. We're going to put a value on those and mark those to market. Maybe we'll issue land certificates. These people can be very creative. Scott Besson himself has said like innovative, like his dad had the largest science fiction library in the state of South Carolina as a kid growing up. And he said he could point to Alpha Centauri on a galaxy map before he could point to where Chicago is. I mean, these are imaginative, creative people. And so, I mean, we've seen through history like no end to the machinations and the ways that they'll do it. Of course, there's a simple answer, right? Use Bitcoin. But that doesn't give them the power, the control, and the manipulation that they want. So the mechanics of how they do that then is they say, look, see, the United States is solvent. we've got all these hundreds of trillions of dollars in assets, so the land, the office buildings, the gold, the Bitcoin. We're going to put a value on all of our military assets and the tanks and the nuclear. And this is now going to go in the sovereign wealth fund so Americans can know what they own. And when you look at the value of that wealth fund and then you look at the value of this debt, the debt at 36 trillion seems paltry. So that we're really solvent. And now the dollar is like a non-redeemable share on this wealth and assets. And they'll do it the same way they did with when they made gold. Like U.S. is backed by gold in 1934, but U.S. citizens can't own gold.
Right.
U.S. citizens can't redeem for gold.
Okay.
And so you
Will
come back. Will
foreign nations be able to redeem for shares in the sovereign wealth fund?
Now, foreign nations were able to. And I think this is where they could start to try to tie this to Treasury bonds. Judy Shelton, who was Trump's nominee for a Fed governorship, I think, if not chair maybe when he was president, but was denied by the Senate because she's very much a hard money person. She's talked about issuing 500, even 50, even 100-year treasury bonds that are going to be connected to, in her mind, gold, but I think could be connected to shares in the sovereign wealth fund or something of this nature. Now, that's a politician's dream. Redeemable 50 years, 100 years. Hey, it's not going to be my problem. And we'll come up with a new monetary system by the time this happens. And this is part of what they talk about with the Mar-a-Lago Accord. And countries that buy these will get U.S. military protection if you don't. And then what they want them to do is not just buy them, they want them to trade in to help extinguish some of the debt and lower the interest payments. So we're going to go to the UK, has about 800 billion in treasury securities. You know,
so they'll extinguish the bond in exchange for military protection for a period of time to lower the U.S. national interest rate. Basically.
And they'll get a 50-year sovereign wealth treasury bond that's zero coupon.
Right.
No interest payments.
But comes with perks.
Yeah, it comes with perks. Yeah.
This is such a strange world we're going into. Okay, then let's conclude on Bitcoin then, because obviously Bitcoin is, well, so far as I can tell, it's the only way to bring this system back to reality at some point. And I don't know, when I say this system, I don't know that it's going to be this system actually. Like maybe this whole nonsense, absurd monetary Frankenstein that we've created just has to collapse, and then we can rebuild something on the foundations of sound money, incorruptible sound money that Bitcoin affords us. You know, I hope that's not the path. It seems like that would be a rockier transition. A smoother transition would be maybe Bitcoin starts out a small percentage of this sovereign wealth fund, becomes a much larger percentage over time, and then we have a smoother transition into a Bitcoin economy. But I want to hear your thoughts about what how Bitcoin plays into this over the decades ahead. And specifically, you said something interesting earlier that you thought it's going to trade. Forgive me if I'm misquoting you here. You said something like, Bitcoin is currently viewed as a risk-on asset, and you think it will be increasingly viewed as a risk-off asset. How do you see Bitcoin playing into the milieu of all this, and then how do you see public perception of Bitcoin?
Yeah. And I don't know if it would necessarily be risk off, but more trading in correlation with gold rather than with the NASDAQ.
Which gold is risk off, right?
It is in some sense, but if you look at it, last year was a bit of a risk on year. Equities did great, but so did gold, right? So gold
I think that's a testament that how strange the waters we are in are.
Yeah. Yeah.
Like you see weird things, like things that are typically inverse now.
I would say positive. More anti-dollar than risk off. Okay. Like I would say go from a risk asset, like it's an NVIDIA, to an anti-dollar asset, which I think gold and to a lesser extent silver is. So it would become the anti-dollar, right? And that would break that correlation, with the NASDAQ. And I think that would be huge for Bitcoin as like a moment of maturity and acceptance and what it is, because a lot of people in TradFi and these hedge funds, and when they're moving it, they just think of it as a trade. Like, how do I get the beta? Let me go in and buy it. And the second, technical level, the 100 days broken, let me dump it all. And once people start saying, okay, this is something different here. We've got our hands on, and I think that's going to be driven grassroots the way Bitcoin has been, which is people from the bottom up are going to say, no, I'm not selling it like a share of NVIDIA. You know, I'm not buying this Bitcoin just to try to ride it for a 10% pop and get rid of it. I'm seeing it differently. And that's going to be a huge change. So I think that's part of what could happen this year, which would, and now you're asking like, how does Bitcoin play into this big strategy? So we covered a lot of ground. We talked about, you know, civil issues that are out there, geopolitical issues that are out there, economic issues. And then, you know, we've seen a little bit of this, you know, co-opting of Bitcoin and the whole crypto space, right? Trump coming to Nashville, right? So, you know, I think Trump in 2020, he realized like, you know, he thought he should have won, but he was outspent, you know? And he's like, I need money. I need the tech bros and the crypto bros, and I'll go to Nashville and I'll say what I need to say, and we'll you know, we're going to do this. That said, he has put people around him that I think are very serious about this. But they could be wolves in sheep's clothing, and you know, wolves in the hen house with some of the, Howard Lutnick, who you know, at Cantor Fitzgerald, and they're the ones that are, you know, backstopping all the treasury bills for Tether and the different spaces that he's put into Commerce Secretary. You have Senator Loomis, who's, you know, the crypto queen, and she creates these bills like stablecoin bill, genius bill, and all those bills do is say Tether, Circle, all that. Guess what? Every single T-bill you have, it has to be now held with a Federal Reserve depository institution. You know, and in Loomis, you say, why Loomis? She's from Wyoming. She's putting carve-outs in those bills to allow for state-chartered banks, and that's a huge business in Wyoming. People think of Wyoming of ranches, but there's a bunch of state-chartered trust funds and banks that they can continue to issue stable coins, but that they need a subsidiary, like a sub custodian. A sub-custodian is the term used, that is a Federal Reserve depository institution. So a state, so it all gets in there. Why does it have to be in there? Because if they're going to flood the zone with T-bills, then, you know, they need that money to be at Federal Reserve depository institutions to continue their fractional reserve banking, central banking nightmare that we've all been living in. So a lot of these bills and these heroes and these speeches and things, in my opinion, and people can totally disagree with me and everything else, but I'm very skeptical of the Bitcoin strategic reserve being a good thing, of the stable coins coming under federal, like the litigation or the legislation that's coming out. When you actually read the bills and you look at it and you have an eye that knows how these things work, you see what they're doing there. You see how they're just moving the whole thing under their control. And so that's why, like, I think for the long run, if the federal government didn't open up a big, you know, would it be good for a price pop in the short term? Yes, if they announce they're going to do it. But on the other hand, I think in the long run, Bitcoin doesn't need that. Just like gold didn't need to be pegged to the dollar for it to really soar from $35 to $800 an ounce. So I think what they're hoping to do is to add Bitcoin into this mix. So they can take that 200,000 or whatever that number is of confiscated Bitcoin, add that in there, have that as a monetized asset that backs these treasury bonds. They can use that when they need to do like QE, right? So if they go into the market to buy, then they know that's going to jack up the price. But they've got the holdings in the sovereign wealth fund. So what that's going to do, mark to market, it's going to jack up the sovereign, right? Like they can influence the price by spending $5 billion on Bitcoin, but it jacks up their $200 billion in holdings or $300 billion in holdings, 20%. You know, so these are all going to be ways that I think the executive branch is essentially trying to take away the monetary levers from the Federal Reserve by being able to incorporate money printing into a treasury activity, a treasury department activity. And so while I see positive aspects to this, right? Like I'm the type of guy, I'm not going to sit here and, you know, say every single thing that Trump does is great or everything he does is bad, or, you know, whatever. Like I look at ideas, I try to look at them through a lens and say what I am, you know? So political leanings aside, this is just what I see happening.
Yeah.
You know what I mean?
Yeah.
And I see that's what they're trying to do.
Yeah, it's an interesting. I mean, I forget who was. I forget who said it, but he said something about like the Federal Reserve Act, if that were ever amended, and the Treasury could just print money directly, right, to pay its bills.
Yeah.
That would definitively be the road to hyperinflation for the U.S. dollar. And it sounds like what you're getting at here, right? That the Treasury is going to claw back some of this power that it's given away. I don't know, was taken away. Whatever. Read The Creature from Jekyll Island. It lost, right? These powers of issuing and controlling the national currency were ceded to this private organization called the Federal Reserve. And if I'm hearing you correctly, you're saying you see that coming back through a lot of these acts, but that is not inherently a good or a bad thing. Sounds like it could be bad for the dollar.
Yeah. Well, I think at the end of the day, it is bad for the dollar. I think they're rejiggering the systems. And look, 1913, they did not only the Federal Reserve Act, they also did the Income Act,
income tax bill.
Yeah. And there was a reason why they needed the Federal Reserve, which the reserve banks, the 12 reserve banks, which are owned by commercial banks, they needed banks because they needed the gold the banks had.
Yeah.
Right?
Yeah.
When we went off of anything related to gold, we didn't need, because the central bank's always been a way for the government to essentially borrow money from rich people through the banking system to have gold. This is like in our first episode, if people go back and watch it, we talk about the history, Bank of England, 1694. Yeah. William III needed money, went to rich people. They wouldn't lend him gold because he had defaulted on debts. But they said, I tell you what, we'll loan you we'll give you the gold to pay your soldiers and build your ships to fight France if you give us the ability to print money, the exclusive ability to print money. And then what we'll do is we'll collect gold from people, we'll give them paper notes, and then we'll funnel that gold to you. And that's basically what the central bank does. Now, when gold goes away, right, it becomes just a money printing. And so the Federal Reserve has been around, not because we need to borrow gold from rich people, but it's been a bit of a check on the executive branch from just doing what they want, or Congress doing what they want.
Just a segregation of powers there,
And it hasn't always been there. During World War II, it wasn't there.
Yeah.
Whatever FDR said, they did. He said short-term rates 0.3%, 10-year 2.5%. Fed, you're going to do what you need to do, and they did it. And then they had the Fed Treasury Accord in 1951, where they got some independence back. But what I'm saying is they're trying to take the whole thing. And if you think about it, also take a look at tariffs. Tariffs are another executive fiat type issue, right? It doesn't have to go through a legislative elected branch. So if you start getting actual revenues through tariffs, and you can revalue gold with executive order, which is money, like you all of a sudden are building essentially a dictatorship. Now, I actually voted for Trump. I like Trump. I really do. But we've got to be careful about some of these policies because maybe Trump's doing it for an art of a deal, short-term fix type of a situation.
Right.
But we're investing a lot of control into the executive branch with a lot of these moves. And we're not, we can't hope for beneficent, dictators,
For
right?
sure.
So we need to be careful of what's going on here with this stuff and not just get all rah-rah, all right, great. Doge, do it, and Cynthia, go on with your Bitcoin bill, and Bitcoin to the moon, and this is where we're going, and then we look back in 5 or 10 years and we say, what the hell did we just do?
Yeah,
we just basically created an executive branch with monetary powers, with taxation powers through tariffs, with
got military power already. Yeah.
What did we just do? Yeah,
that's an excellent point. And I get very argumentative and with people that think politicians and politics solve problems. I'm very skeptical of all political movement. My study of history is politics just create problems over and over and over. And then sometimes we solve them with technology. Technology can also create problems, clearly, but we do seem to solve things with technology in a way that politics just doesn't do. I guess you could argue that diplomacy sometimes calms things down, but it's just people fighting over stuff and then trying to create all of these different ideological constructs to justify why they deserve the stuff and you don't, basically.
Yeah.
So
I mean, that would be the better solution, right? Because think about all the big problems we've had. Like people thought we're going to run out of food or whatever, but technology, people thought, all these things that were these challenges, like, oh, you need clothing and technology and the loom. And then, you get these advances that allow, in many respects, we all live like better than emperors did 2,000 years ago, right?
Yeah.
In many respects, the medical care, the dental care,
and it's true almost
running
every
water.
generation.
Yeah.
There, obviously it's with some regression, but in general, the overall theme is, we live like actual royalty compared to people of the past.
Yeah, and so if we stopped with the control and the violence, and to some extent, don't get me wrong, there have been a lot of good technological advances through warfare historically.
Yes,
but it doesn't mean it has to be because that's the way it was.
Exactly. Yeah, that's another point. And like, sure, we have made, there's this quickening effect war has on technological innovation, but there's this whole thing of the seen and the unseen, right? It's like, well, we don't know that means war makes technology emerge more quickly. We don't know what it's like to not have war and see what technology emerges under that paradigm. So yeah, I hear that a lot. And of course, warfare engenders a lot of necessity very quickly when people are trying to survive. But I'm just betting on human freedom, man. I feel like that would just create so much more abundance for everyone.
Definitely. And I think, you look at, shows like this and you look at how the breakdown of the mainstream media and people getting like news sources from different voices, and then they can decide what they think is BS or what makes sense or what's real. The more you're seeing that, I think a lot of the crap these people are trying to pull on us, it's not working. I think they wanted a central bank digital currency.
Oh, yeah.
I think they've all but given up on it. Powell and his like they realized that people weren't having it, and now they're trying to do, in my mind, this backdoor CBDCs with the Genius Act, the stablecoin bill, where they can get the programmability and the data and get it in the deposit. So I think they're trying to find back ways, but like we go out on shows and we talk about it. Hey, well, these are in the bills and this is how it's happening, and people start to learn. And so a lot of their traditional control mechanisms are breaking down. And so there's positive stuff. I mean, I'm always kind of optimistic about the future that we'll get through this, and, the dollar system might collapse, or currency systems collapse all the time. It collapsed in 1971. It collapsed in 1933. Yeah. I mean, my dad was born, 39, so he wasn't around for 33. Yeah. But he's seen basically 2 collapses of the global economic system in his lifetime. It happens, and so we're due for one right now, and I think that's what we're seeing, and we can get through it. But hopefully, we don't get through it with World War I or a World War II. And this comes back to the beginning where I said the difference now is I thought we'd already have probably hit that point, but we're in the nuclear age, and so these wars are being fought much more cyber, drones, proxy wars. But we're more or less in a sort of a geopolitical, geoeconomic war right now with Russia and China. And I think Trump's trying to like maybe tamp down some of the war rhetoric, but he's tamping up the economic rhetoric, and they've been tamping it up too. So this is the world we're heading into, and where it's all going to work out, I don't know. But I do know that there is, like I said, the solution to all of these problems. Like come back to the monetary problem we're talking about, right? Which is a way to kind of measure, preserve wealth that's kind of incorruptible, uninflatable,
hyperportable,
hyperconcealable, all of those things. Yeah. And the only way it's going to work and achieve all those things is one way, if people believe in it, right? Yeah. And that's the fundamental essence of it. Why did gold work more or less for thousands of years? Well, people could have said, silver, but then, silver, you have to carry a lot more of it. It's not, but platinum, that's, about as common as gold. It's actually less common than gold. Why is platinum at 900, gold's at 3,000? It's the trust, it's the belief, right? Like platinum should be way more valuable than gold. Gold has a monetary premium to it, and and that monetary premium is just the acceptance of it. Yes. By all of us. Yeah. And if people accept Bitcoin and start thinking in terms of Bitcoin and and Bitcoin becomes looked at as a true store of wealth, then I think it holds out that promise. But it's ultimately the technology, but it's also ultimately us. And do we believe it or not?
Yeah, I think it's a great point. And then the only slight caveat for me is like the word belief is just a little bit ambiguous, where it sounds like it's purely subjective. We choose whatever we want, but like clearly that's not the case, right? You can't make bananas money because, well, the stock to flow ratio is terrible basically, and they're consumable and they're not durable. Like they don't have these properties. So
well, the properties are great, but there's other things with good properties.
To try and like summarize that, it's like belief coalesces, subjective belief coalesces around objective properties.
Yes,
basically. So like which tool is best for the job, that's the one people are going to believe in over time.
Much better said. I agree. And one key in that is it's got to be that collective belief, but there's a reason why, right? There's just like there was a reason why they picked gold. Like I said, you could that was the original reason why there was like a premium to gold, silver relative to its natural occurrence. So silver is about 8 times more common in the Earth's crust than gold. So you'd think like 8 to 1 would be a good ratio, but historically it was closer to 15 to 1.
Right.
It's not anywhere near that now. And that was really because of its portability.
Yes.
Because with silver, instead of needing to carry this much, you could have a pocket. So Bitcoin has those properties, those objective properties. But then at the same time, you also need kind of that collective acceptance.
Well, that's a great point. Yeah, people have to. This is why we often say it's the pain that's going to orange pill more people than anyone, right? Like people need to feel the problem before they'll identify the solution, right? It's not like we sit here and we can educate people. You know, that helps for some people, right? A lot of people get orange pilled and they learn about Bitcoin through reading or listening to podcasts, whatever it may be. But the vast majority of people, it seems to me, move as a result of pain, right? There's that saying that you don't change until the pain of not changing becomes greater than, right? The pain of not changing is less than the pain of staying the same, right? So you have to actually change.
Yeah.
And so all these things you're talking about, the inflation, the potential for hot wars, you know, the capital controls that come along with that, financial repression that's often used. I think all these things over time are just going to be the pain that pushes people to seek out which tool is best for the job or best for the problem they're trying to solve for themselves in that moment. And that it's that long process that's probably gradual, just like he said about bankruptcy. It's gradual for a while, but then there's going to be acute shocks where it's sudden, right? There's I forgot the saying now. Or there's weeks where decades happen. Yeah. What is that saying? He said.
There's some weeks where more happens than in a decade, maybe.
Exactly.
Saying.
Yeah.
But I mean, or look at evolution, where there's these little changes, and then you see like in the fossil record, like. Something.
There's decades where nothing happens, and then weeks where decades happen. I think was something like that.
Okay,
but,
there you go. That sounds more eloquent.
Yeah.
But yeah, exactly. You're totally right. And you mentioned financial repression, which we didn't get into, which I think is also probably coming. Which and when you look at Bitcoin and your own keys, your own cheese, as you said, like, okay, if the government starts using, stable coins get pushed really hard, and then there's controls put over something where. Well, that's what they're going to need to do, because that's how you keep that currency. It's like China, right? Like you can't, like it's like something like 50,000 US dollars the average Chinese person can take out of the country, out of yuan or the RMB on a yearly basis or something. And they come here and they spend all this money because that's all to do with it, but it can only do it like that amount or whatever it is. Or to get away with it, they might buy real estate because or they buy Bitcoin.
Yeah,
the Chinese own a lot of Bitcoin, even though it's illegal there. They own a lot of gold.
They mine a lot of Bitcoin too, even though it's illegal there.
Yeah, exactly. So we've got all of these things kind of in the ether going on. It's interesting, fascinating times. There's a lot of stuff moving quickly, but I do think we're getting to one of those points where maybe it's like. There's going to be a year where more happens than in like 5 decades as far as like a monetary shift that just occurs. And people will look back on it and say, what the hell just happened?
Yeah.
We're now in a totally different world, just like happened in 1933.
Yeah. Bingo. Mel, thank you so much for coming out to Miami and having this conversation. This stuff is super fascinating. I mean, I'm encouraged that people seem to be digesting it more. There are more conversations around money and how all this stuff works. And, people are waking up to the nature of inflation and the term fiat currency is being used more widely. So I'm encouraged by that. But I think you do a really good job of just breaking it down, right? And connecting all these dots. So I really, really appreciate you doing this. Where can people find about you and your work on the internet?
Sure. Mel Mattison 1 on Twitter is where I'm at. I post regularly, not a ton, but I'm there. And please follow me if you would. I'd like to hear from me. And then melmattison.com is the website. People can go there. I've got videos up there. There's a newsletter you could sign up for, and that's Mel Mattison, MATTISON.com. And Quoz, the book, it's available wherever books are sold. Audiobook is available. Apple, Google, Audible, wherever. Just QUOZ, Quoz is out there. So thank you so much for having me, Robert. It's a pleasure speaking with you. Your depth and thought process on this is deep, and I love it. And happy to chat anytime.
Thank you, man. Yeah, we'll link to all that in the show notes, and we'll do this again. This is a lot of fun. We'll need an update because there's a lot of stuff happening. Thanks, man.
Definitely.
Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money, and be sure to subscribe to this channel to stay connected.